So, in this video, what I want to talk about is not very long ago, I encountered a student who came in from SMC. Now, this isn't the very first student that came to me from the SMC concepts, which is the smart money concepts. We've received a lot of requests from people coming in from the SMC. They're saying, they've been failing prop firm challenges. But this particular student that came to me, it's because of him that we're making this webinar. And the topic was mainly whenever we had these conversations together, he was very good at explaining the concepts of the SMC, almost better than the educator himself. Like he was the best one I've seen. He knew it in and out, like as perfection can be, but he didn't understand the mechanics of why it needs to be done that way. Okay, and there was a lot of holes in what he was explaining, and these are the things I want to talk about today. So, I hope you guys are excited. As we're gonna get started on this topic today, we're gonna talk about what are some of the things that the SMC does really, really well, and how are some of the things that can help you? What are some of the things I've shown some of my students who came from SMC, and then what are some of the things that once they tweaked a few things, then suddenly they had a little bit easier time passing with their prop firm challenges that they've been failing for quite regularly. So let's talk about some of these things. Yeah, I hope you guys are ready. I'm going to start the screen sharing. All right, I think my screen should be visible. I'm just gonna keep this chat on the side so I can see it. There we go. So I can see your comments at the same time. All right. Okay. So now let's talk about a few things, and let's talk about some of the elephants in the room. Now, a lot of the mechanics of SMC is very technical, which is great, that's how I started when I got into the markets, right? Not with SMC concepts. I've actually been around longer than they have. We're one of the oldest YouTube channels out there. Um, but when I got started, I didn't really go into fundamentals. I went straight into technicals. How many of you guys in this room straight into technicals? Right? I'm sure like 99% of you, like just straight technicals. There's a chart, looking at a chart, and we've been attracted to something is being done to the chart, and then money's coming out. Fascinating. What is this world of green red candles? And then I see someone drawing certain things, and then clicks a button, and then clicks another button, and then suddenly he's got a smile on his face. It's like, what happened? What did you do? He's like, I made money. Made money from what? Like, you see how fascinating that is? So for me, that was the most fascinating thing. I mean, of course, kids these days, with their iPads and everything, they're like, man, this is normal. What are you talking about? But from the world I came from, the physical work and everything to suddenly electronic, and that too, the numbers of like, $5,000 in a single trade. I was like, did you know I don't even make that in an entire month? This is fancy. Like, this is so cool. Okay, so that's how I started, right? I'm sure all of you guys started like that. So I got pulled into this thing and that same concept. And everything was, how best can I solve this to make money? So I'm looking at this, you are looking at this, he and she is looking at this, but I buy here, I make money. But if I buy here, I lose money. Whoa, okay. So I must need a strategy. I must need a technique. So someone must have done this before me. Maybe they can show me the way. I don't want to do it myself. It's like someone must have already done it. Please tell me. Right? So, everyone's journey starts like this. Luckily now there's YouTube, and YouTube is fantastic. There's so much pieces of information out there. It's fantastic, but also scary at the same time because there's also bad information. There's like little 16-year-old kids showing people how to trade. Okay, I'm scared now, right? So all of this concepts is now, how do I solve this chart in front of me? Okay, everyone with me so far? So this is the game. And then out of nowhere, this channel started popping up. calling it ICT, and then SMC, smart money concepts, which is talking about fair value gaps. It's talking about uh, what's that change of characters or change of structure, break of structure. It's talking about um, what's that thing where they go really high above the thing really fast, distinction or something like that. So there are certain elements that are very powerful about it, but then there's a lot of holes around it where when I talk to some of these students that learn this style of trading, I feel they've been given a car. They've been told that's a tire, that's a tire, that's a tire, that's a tire. You have 4 tires. You're going to be good at racing. And then the person's like, great. I know how to spot the left tire, the right tire, the back left tire, the back right tire. I'm good at labeling where the tires are. Wait a minute. How do I race? How do I race? All that is not there. It's just because it's easy to label it. Therefore, at least I've entered the world of trading. This is why it got so popular, because it sort of demystified trading a little bit. But that doesn't mean it's wrong. That doesn't mean it's wrong, and that doesn't mean it's all wrong or all bad. There's actually really good stuff in there. So let's talk about fair value gaps first. Okay, let's talk about fair value gaps. Now, everyone in here who's done a little bit of SMC before will say fair value gap there, fair value gap there, right? Right? It's the stuff that you see this little tail that the wick that comes up. You see this little tail that comes down. There's a empty area on this candle in the middle that is untouched. It's like naked, right? Same thing here. There's a wick on top here. This full candle is empty, empty, empty. Next candle opens, the tail comes this far low. So in between these two red lines is considered the fair value gap. So the concept then becomes is fair value gap plus a percentage of pullback. Okay, fair value gap plus a percentage of pullback. So I had the student, very, very skillfully explaining the rules to me like a diligent student would, right? He's a very good student, thousands of notes, and he's just sitting here explaining things to me. And I would ask one question. What if X happens? What if X happens to this? What happens if I take you to a different market? Suddenly, well, I would have to readjust. I would have to rethink about it. I haven't looked at that situation before. I wouldn't know what to do there. There's so many confusions that come at you because it's like how if you see like many of you, how many guys in this room have a driver's license? Everyone must have a driver's license, or at least half of you in this room have a driver's license, right? To get the driver's license, you have to prove you know how to drive, right? If you prove you know how to drive, in that process, did they ever teach you how not to get in an accident? No. Did they ever teach you if someone is running a red light, even if you have a green light, you should slow down because they're going to hit you? No. No one teaches you all this stuff. It's something you learn on the job. So this is very similar to that. Trading is like that. You can get your license by learning a few things here and there, but you gotta be open to the exploration of trading. You can't just be stuck there and saying, I got my license, I'm a trader. I got my license, I'm a trader. I got my license, I'm a trader. Okay, stop. Like, we're labeling everything. Great. It's a good start. Now begin the trading journey. Take your labels and begin, right? So that's where I see that little gap there, because that experience hasn't built on those labels. The experience is missing. Okay, so, and I'll tell you where I first heard SMC from. Okay, I first heard SMC about from my security guard of my building. So My security guard is of Indian descent, so he always feels comfortable to talk to me. This is in Dubai, right? So I bought a property in Dubai, opposite Burj Khalifa, and every time I walk past him, he's like, "I saw your webinar on YouTube. You're that trader, right?" I'm like, "Yeah, yeah, that's me. If you have any questions, feel free to ask me. No problem." And he's like, "Yeah, yeah. So I do SMC, smart money concepts." I was like, "What's a smart money concepts? What are you talking about?" And then he would just say, "You see this? That's a fair value gap." So I got a security guard telling me about this thing. I was like, "How's it working out for you?" No good, my friend. No, the face he made, I still remember till this day. It did not look happy. It did not look happy. So it's I've seen that it's easy to consume that information, but it's very hard to apply. So let's talk about certain things, okay? We're gonna get into this. Now, i- don't think of this as that means I shouldn't do SMC. No, do it. I see someone saying Wyckoff inside the chat. All of these methods, they're methods of how to get your driver's license basically into the market. You still need to drive a bit to pick up on, oh, okay, you get what I'm saying? And you guys, I'm sure you understand what I'm saying because you all have your driver's license, but there's so many things you've experienced while driving that they never talked about when you were studying for how to drive. It was just sort of like roughly talked about, right? But you learned it on the job. You learned it on the job. That's trading. That's trading. There's so many things you'll pick up on the job. So if you make it too mechanical, you won't pick up stuff on the job. Okay, so how do we demechanicalize this thing? All right. So um, let's talk about fair value gaps. So fair value gaps for us, right, is one simple concept. One simple concept that we explain to our students is the goal of trading is exchanging of products. Okay? I have this, I give you this, and we exchange. That's the game. I give you the product, you give me the money. I give you the product, you give me the money. Right? That's the game, right? Okay. All right. So in this process, if someone is selling something to you very expensive, are you going to buy it? No, you're not going to buy it. So this part doesn't exist. It's not trading. The trade did not happen. Now you must be thinking, duh. Like I know that stuff, Naveen. I'm gonna test it a little bit. Okay, everybody knows this stuff. Everybody should know this stuff, but we don't use it in the markets. When we come to the markets and we look at this chart here, we see, okay, you see, I see a fair value gap there. I see a fair value gap there. I see this is a 70 something percent retracement here. So this fair value gap is better than that one. Okay. And then price comes here and then it takes off there. All this stuff, the focus is here. Very narrow focused. Not one is looking here and saying, and what happened to the price now? And what happened to the price now? And what happened to the price now? Okay, because the game of trading is price related, not green candle, red candle related. It's not Squid Games, red light, green light, and then you run a little bit, red light, green light, and then boom, 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 boom. Like, not like that. It's price related. Hey man, I got this product. You want? Yes, I want. How much? I'll pay you this much. Let's do business. Or I'm not going to buy it. Oh, what if I pay you this much? Oh, I'm not going to buy it. What if I pay you this much? I'm not going to buy it. What if I pay you this much? I'm not going to buy it. What if I pay you this much? Okay. This movement that goes from here to here super fast, that creates fair value gaps, is actually called unfulfilled orders. Okay, unfulfilled orders, which means I want to buy, but I don't get. I want to buy, I don't get. Therefore, I have no choice but to offer a higher price. You still don't want to give it to me? A higher price. You still don't want to give it to me? A higher price. Two things are happening when this fair value gap is created. One is someone wants to fill. They want to fill, right? But two, it's giving me a clue about the demand. Someone is cuckoo about this thing. They want this. Now, two things, I run a question through some of my students and I challenge them with this thinking. If someone is that crazy for that product, what makes that price of that product come down 70% discount? Have you ever thought about that? Oh, no, but 70% is good. Anything more than 50% is considered premium price, and premium is good. My friend, yes, everybody's read the same Bible. Like, come on, take a moment and think. The Bible, everything, you've got a brain also, you got to think. What makes the price come down 70%? Is there something wrong with that demand? What happened to the guy who really wants this product? You see, so if these questions cannot be answered accurately, then there's a gap in the education. There's a gap in the education, right? Because it's price that's moving up, it's price that's moving down. And if price is not sustaining, then price doesn't move. Okay, how many of you guys in this room have a little bit of technical analysis background or have some technical analysis knowledge? Okay, so let me do this. If I draw something like this, it goes up, it pulls back, and then it goes up, and then it pulls back, it goes up, it pulls back, it goes up, it pulls back, it goes up, it pulls. Okay, all right, you guys have 30 seconds. What did I just draw? Come on, show me your vocabulary. Show it to me. What is this? What did I just draw? Okay, so this is a high tide flag, right? It's a flag. Now, great. Many people know this word. They've seen it in a book. They've studied it somewhere. Someone on a webinar showed them to this. But what is this? It is super high demand, which means people are not getting filled. No one is selling that product, which means price is not coming this way. It's going that way. The speed it's going that way is telling you, oh my goodness, someone really wants this and no one is selling it to him. Of course, you're going to get a fair value gap. Do you think you're going to get filled in this? A person from a different technical analysis background that says this is a sign of a breakout that can pop and fly upwards. Okay, stock traders, they do this all the time. Okay, I see some of you guys saying that's about to break out bull flag. Good, good, right? But now that logic is kicking in of, I know why this looks like that. I know why this design happens to be like that, because whoever was selling is selling less and less and less and less. Why is it less and less? Because it's being absorbed. It's being absorbed. It's being absorbed. Do you know in this sequence, your volume also generally tends to decrease? Did you know that? Okay, so this, when I say decrease, some of you guys might be looking at these big wicks that I drew. I want you to take the average. You see how it's decreasing the volume? So all of these signs are telling you it's for a buy. Now, you see how I'm connecting multiple elements. I'm trying to make you think of why is that designed that way? Draw the design that way. Look at the volume to understand the behavior as cells are trying whatever supply that there is, it's being consumed by the buyer. Of course, there's going to be fair value gaps in this part of the flag, in the pole, right? There's going to be fair value gaps there. Price is not going to come there. You're not going to get a 70% retracement on this thing. Okay? So then the question is, well, then if I don't get a 70% retracement, then I shouldn't buy it. It's okay. That's not a trade for me. Great. Great. That's good. You're following rules. That's good. That's a good thing. But you need to understand why it doesn't come down. Now, the opposite thing I want you to think about is what if it does come down? And you're like, ooh, he's at my area that I'm supposed to buy. Isn't there a single thought that goes into, my friend, the price demand went from here to here. They went absolutely berserk crazy to buy this thing. And then now they're pulling back down. Why did it come down 70%? What happened to the guy who was willing to kill people to buy this product? What happened? And if it comes down, will it buy again? How do I know it's going to buy again? Apart from there's unfulfilled orders. You see? So you need to close that gap. You got to close that gap to find out, I do know someone is there to buy that thing. Okay. Now, okay, stay with me. Stay with me. If I say on a lower time frame, inside this, you are here and you create a fair value gap there on a lower time frame and it comes down 70%, do you know if they're going to buy it? Oh, that changes everything. Yes, they're going to buy it because they're in a mode of buying these things at higher low prices. That 70% is fantastic. Bloody buy it. It's a very different thing. So to understand the flow of the market is the absolute universal basic. Like you got to have that built into you. You got to find out, for my trades to work well, I need movement. Because movement is what creates fair value gaps or unfulfilled orders. Movement is required, right? Everyone with me so far? Does everyone understand when I drew the fair value gap here versus when I drew the fair value gap, that you see the distinguishing change there? Yeah? Okay. Now, one key part to really hone in on and understand, as traders, the market moves in a particular fashion. It moves, it goes pause. It moves, pause. It moves, pause. I want you to think of it this way. The market, okay, in the professional language, it's called price discovery. Okay, it's called price discovery. But what it basically is price is looking for a home. Okay, it's looking for a home. Just think of it, it's hanging out here for the longest time. It's doing all kinds of stuff. It's moving up, it's moving down, higher lows, lower highs, up and down, fair value gaps, change of characters, ups and down characters, Mickey Mouse, everything is doing that. And then unacceptable price moves to the next, looking for the next home. It moves, it travels. This is the only two-way the market behaves, in this or in this. As a trader, you need to figure out, when I operate, am I in this market? Am I in this market? If I'm in number one, I'm going to get a ton of 70% pullbacks, no problem. If I'm in this market, forget about it. Forget about it. Let's go deeper. If price is being discovered, it's looking for a home, it's running away. Think of it like that. It's looking, he's left the house, he's looking for a new house. Two things can happen when it's looking for a house. You can be the trader that does the buying, or you can be the trader that does the mean reverting, because it's gone too far. It's gone too far. But for whichever way you are doing this, as a trader, you can belong to either of these camps. There's two camps in the price discovery. You make the discovery or you reverse the discovery. Okay? Reverting of the discovery is something like this. I'm going to show you guys. Now, ready? Take a look at this. Let me move you to here. Take a look at this. Okay. We're on this chart, right? This thing is moving up from here all the way to here. 665% move in a matter of days. 665% move in just few weeks' time. Okay, a million fair value gaps inside. 70%, 80%, 100%, everybody steamrolled, killed, executed, hanged upside down, naked. Why? Why? We follow the rules, we do everything. Why? All right. This thing requires a little bit more understanding. Okay, it requires a little bit more understanding. This is a car rental company. Okay, this company is called Avis. Does everyone know what Avis is? You guys heard of Avis, Hertz, all of these words, right? Rent a car. You guys heard of this stuff, right? These car rental companies, you guys will have them all across Europe as well. Eurocar and, it's everywhere, right? Renting companies. So suddenly, out of nowhere, this car renting company is making 500-600% moves in the stock market. Wow, man, people really want to buy this thing. Oh my God, they want to buy this thing. It's grabbing my attention too, because I'm a guy who likes to deal in things that are hot. So I need to find out, why is this hot? Why? ¿Por qué? Right? Why is this hot? Right? I need to find that out. And I find out it's going crazy because the airline industry in the US, the government had a shutdown, and that made the TSA not working, and there was delays and everything. People like, screw flying. We're going to rent a car. We're going to take a car. Okay. So everybody's driving a car now. They're renting a car and they're going to their destination. That increases demand. Now you tell me, in the world of stock market, this is a company. Things go up because the company performs well. Do you think this company is making more money and it's going to continue to make that amount of money into the future? Like suddenly, if he's making 500%, can he do that again next month, 500%? And the next month after that, 500%? No. Why not? Because that means you are saying the TSA or the airport security is never going to come back to work. That's a little silly, isn't it? So now they come back to work, the airline industry is back in business, and the whole thing collapses. Wait a minute. What happened to my fair value gap? Wait a minute. What happened to my Fibonacci 50% retracement? Wait a minute. What happened to my moving average trading? Wait a minute, what happened to my higher low sequence trading? What happened to my kangaroo pattern, my bat pattern, my rat pattern, my Mickey Mouse pattern? You can label anything. You need to understand what you're dealing with in the market. You can't blindly come in and saying, you see this? You see that? This is called a higher low. You see this? Look how perfectly it connects. That means we have a trend line. Trend line equals orgasmic. Therefore, money. No, no. Like, okay, it's easy to learn these things, but you gotta be a little bit smarter than that to say that's a little silly, don't you think? That's a little silly. So if a move creates fair value gaps, the very first thing I would like to do is what caused the move? I need to figure out. And then I will say, oh, that's good. Then I say fair value gap is going to be fantastic. Yeah, baby. So first I need this check mark to clear. Okay, so these are the things that I shared with some of the students who went on to pass these prop firm challenges. Just simple mechanics to saying you got to understand what you're doing. Don't just label things. So once you get that check mark going and saying, I know what that is, I know that thing is here to stay. Okay, next thing, why should it come down 70% to come pick you up if they're literally screaming, this is hot, this is hot? Who's going to give you a 70% discount if they're going bananas for this product? Whoa, I didn't think of that. I mean, the rule says pick it up at 70%, but because I shouldn't chase. That's the answer. Well, okay, great. That's a good answer. You shouldn't chase. But why should it come down 70%? Actually, more than 50% is considered premium. Okay, great. More than 50%, fine. Why should it come down 50%? You see, you got to probe yourself with these questions and saying, do you really know? Do you really know? Or is this a labeling mechanism because you can't label your way into money? I wish. I so wish, man. I wish. I'm with you. I wish we can label our way into profits. It would be so much fun, right? I would draw a trend line. It comes, touches a trend line, money comes out. Like, oh my God, that would be so much fun. Like, we would all be in the Maldives smoking weed. It's like, no, let's not do that. But it would be a lot more fun if it was just easy like that, right? It would be so much fun. Okay. All right. So let's come back from Maldives. Let's focus. We got work to do. All right. Let's come back from the dream. All right. Back to reality. Okay. Right. So far so good. Does everyone understand this thing? You know, obviously, if you haven't subscribed, please do so. It helps the YouTube know that you're interested, and like and subscribe. So if it's making sense, let me know because we're gonna go a little bit deeper into this thing. So the very first thing is identify. Identify what caused the movement. Yeah. Once that's clear, then go do your fair value gap stuff. That's fine. Identify those levels or those areas and let it be in the prime, not prime, in the premium spots, right? 50% and below, if I'm not mistaken. And then answer the next question: why should the price get there? What happens if it doesn't get there? How should it look like if it doesn't get there? If it does get there, how should it behave on its way there? Should it come slowly? Should it come fast? Should it come choppy? Right? So here's the thing that we talk about at Urban Forex. Okay, what SMC refers to as liquidity grab, we refer to it as the vendor game. Okay, this is how vendors operate. This is how vendors operate. Okay, now, does everyone understand vendors? Vendors are the sell side of the game. Okay, sell side of the game. Now, normally when I use this word to new students, when I say sell side, their mind goes, oh, you mean not buy, the sell. It means down. No, that's not what I mean. The sell side of the game is if you want to buy a stock of Apple, you need to get someone to sell you that stock of Apple, right? So you're not going to knock on someone's door and say, hey, bro, you got a stock of Apple? No, you're going to talk to your broker who's going to sell you this. You're going to talk to your bank who's going to sell you this. You're going to talk to an agent who's going to sell you this. Wall Street is considered sell side of the business. So far, so good? Now, when it's the sell side of the business, the focus is you make money, you sell money. You make money or you lose money. I don't care. I want my commission. The sell side of the business is cutthroat. You made $1 million today. Good for you. You lost $1 million today. Good for you. Where's my commission? Sell side of the business is just that. They don't care what you do. They're just like, you made $1 million, give me my 2 pips spread. You lost money. Good for you. I'm sorry, buddy. 2 pip spread, please. And you pay up front. All right? You don't pay after. You pay up front. So far, so good. You guys understand that, right? Everybody here who's traded even one trade understands this. That you're trading from a platform that someone needs to sell to you, whatever it is that you're trying to buy. Yes? Everyone understand that, right? Okay, let's go into the dark side of the business a little bit. The controversial dark side. Okay. Now, liquidity grab, as the word is thrown around. How do you do a liquidity grab? Have you, together with your friends, tried to put together some lot size and saying, hey man, you, me, my friends, everybody in this chat room, we're gonna buy so much that we're gonna move the price from here to here, and then we're gonna sell the crap out of this thing. How many people do you know do that? How many people do you know do that? Zero. Zero. You know why? Costs money. It costs money to do that. You need to have more money than every Tom, Dick, and Harry out there swinging for a buy or for a sell. You got to have more money than them. So far, so good. If you're in Forex, you better have serious cash. If you're in stocks, you just need to have more than whatever the trading volume is. Simple. If the trading volume average that they trade is approximately $1 million per day, okay, small cap stock, like a very tiny stock like that, $1 million per day is their average trading volume. You got $100,000, $300,000, you can be part of that market. Does everyone understand what I just said? You can be part of that market. Okay. In Forex, forget about it. Forget about it. You need billions. Okay. Now, so the idea of liquidity grab is not chump games. It's not for the Joe Schmo. It's for the big boys. Now, how the big boys operate is, let's say prices are moving here and they're doing this. They're doing this. There's a clue that you have and I have. Big boys want this thing. Pattern traders look at that thing, says, I want that thing so badly. I know it's going to be a buy. And when it's a buy, we're going to buy this. We're going to go to Maldives and we're going to smoke weed. That's what the guy on YouTube said, right? Right? I didn't really say that, but that's the idea, right? Everyone is gearing up. Everyone is ready. So the big boy says, I want $50 million worth of shares on this thing. 50 million. But the people selling is only 5 million. The people selling is only 5 million. You know what the big boy does? He picks up the phone and he calls all the vendors, big ones, and he says, listen, MF, I need a price to get filled around here. I've been doing business for you for so many years. If you mess this order up for me, go find another job. This is how they talk to their brokers. Now, Joe Schmo down the street, on the other hand, Mr. Broker, can you please approve my application? Please, 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 please. They think the broker is God. Well, the big boy treats the broker like shit because he knows the broker works for him. The average person treats a bank and their broker as if that's God. It's not. You forget they work for you. They make their money because of you. When that distinction gets lost, it's a problem. Okay? So he makes that phone call. He says, I need these prices. What they say is, yes, sir, we'll find a way to do this thing. As prices move in a particular way, brokers can manipulate the spreads a little bit, causing prices to fluctuate and waterfall. That's what causes people to jump into the buy, place their stop losses, and then prices come down. And once they come to an area where a stop loss might be, we're watching for how quickly does that price recover. If it recovers like this, that's a big order, baby. That's a big order sitting right there that he just ate. So the concept of liquidity grab is a big boy's game. We call this a vendor game. This happens at very strategic locations. Okay, this doesn't happen at any random spot. You need to know how the world is thinking. They're not thinking SMC. The world thinks in a very different way when they're trading. You need to figure that out and then understand where the dash of evil. Sorry, I'm using Urban Forex terminology. That's not a real word. It's something we made up and we're using. Okay, we're honest about it. It's words that we've made up from our butt. Okay, it's not real vocabulary. So, but it's the vendor style game where they go for that grab. Many people, retail traders, we train them that if you don't know what you're doing, I want you to start when the vendor begins. If you start where the vendor begins, your chance of winning suddenly goes up 10x. So it's how you read, it's do you understand the demand, is how you understand the vendor, it's do you understand the different players in the market. How does a big boy operate? What is his headaches? How does a little guy operate? What is his headaches? The little guy has no headaches. If he wants to buy and he says $50,000 filled, no problem. It's not a big amount. You'll get filled. If he says 50 million, phone calls will go around because no one can find orders to fill him. He has a different problem. You need to understand what this problem is. Because if you understand how he feels, you can perform 30 times, 40, 50 times better than you're doing right now by saying, if I just draw a line, that line better be good. No, man. Come on. Come on. Yeah, but that line though, bro, that line. Maybe if I use a scientific ruler, it's like, so we can all label things, right? So we're good at labeling things as humans. We love patterns. That's good. But what I'm trying to tell you guys is when I have SMC traders coming to me, they've got a lot of good knowledge. We just need to fill in the holes of, wait, do you know why this happens? Do you know when you should not do this thing? Do you know when you should do this thing? And as we start closing that gap, suddenly these guys become very profitable. They're actually very, very good then after that point because that there's so many big gaps in between where the labeling is good, the knowledge is okay. Okay, I wouldn't say it's bad strategy. I'd say it's a pretty decent strategy. It's just we got to fill in those gaps. You know, you've got a driver license, you've been handed a manual to a Ferrari, and you're like, all right, where's my Ferrari? Like, what do I do now with this manual? Right? And you're like, I know a Ferrari has 4 tires. Yes, my friend, everybody knows a Ferrari has 4 tires. Why does it have 4 tires? Like, let's start there before you're like, let me show you on the manual where the steering wheel is. Like, let's stop labeling stuff and let's get into some the meat of trading, you know? Does this get is this making sense? Is this making sense? Do you see where the gap in the knowledge needs to be filled? Okay, that gap needs to be filled in properly, and then it will become a lot easier, a lot easier. Okay, so one of the things that we like to do is make sure that you have something that tells you to distinguish what kind of market you're in. Are you in the market where price is chilling in a house, or are you in the market where the price is looking for a house? Right? Prices move in that fashion. House, next, house, next, house. So, and then you ask the question, am I the guy who brings the price down, or am I the guy who likes to trade with the price? Are you trend trader or are you counter trend trader? Are you trader in this phase? Okay, this phase is called the no man's land, but this is the phase that actually SMC traders will do better in. Not in this phase. They will do better in this phase. Okay. Now, if you do better in this phase, it's different in Forex and it's very different in stocks. Yeah. So once you start to identify these things, the knowledge will harden, the knowledge will get better. And that's when you'll be like, oh, crap. Like there's more to drawing. I need to get to grade 2, grade 3. I got to level up. I got to level up. I got to take my knowledge one more step further, right? Because I'm telling you, my security guard knows SMC, right? SMC is popular. Doesn't mean it's bad, just means it needs a little bit more work. Needs a little bit more work. All right, guys. If you guys found this useful, okay, you want to start learning things the right way. You can come on to Urban Forex. You can join Urban Forex by heading to the website www.urbanforex.com/webinar. And you can pick up our entry level program, which is the Mastering Price Section 2.0. That requires you to be in this phase, this one right here, in that phase. If you're in that phase, I'm going to teach you how to do something called cheese trading. As you graduate from that program, then the next program is something called the ITP program, which is the Iconic Trader program. And the Iconic Trader program teaches you how to be in this phase right there, so you can capture this, right? You can capture that. So there's multiple areas that we focus on, multiple edges that we focus on. As you have multiple edges and you have a better understanding of the market, you can bring it down and saying, okay, now I take a step back and I want to do the simple things. Maybe I want to be a moving average trader, but I know when to do it and when not to do it. Maybe I want to be a range probe trader. I know when to do it, when not to do it. Obviously, I'm not going to do it here, right? So once you identify this universal mechanics and you start, learning these things, you'll see that even a little bit of information that you might have scraped off the internet can become powerful. But you got to know your universal mechanics properly. Of like, what's this game all about? What is trading? You'll be surprised how many people I've come across and they don't know what trading is. They think trading is a chart. That's not trading. It's a representation of what's happening. Trading is, I want this. Do you want? How much you going to give it to me for? Okay, that's trading. It's an exchange of products because you want and I'm willing. If you don't want, but I want to sell it to you, then the price keeps changing because somebody doesn't want it. It's that. And you guys do this all day long in the real world. You guys do this all day. You guys go out and you're shopping and stuff. You don't go to the store and saying, "Hey man, how much for these Levi's?" Oh, that's $75, sir. No, I'll come back tomorrow when it's $90. Like, come on, who does that? Like, no one does that. It's like either you accept the price or you wait for a sale, but you don't say, I'm gonna wait for it to be more. Right? Universal truth that we all follow. right? Like basic principles of humanity. Like, so it's a thing like that. And this, it's what creates the demand when certain things go out of control. That's why $100 or sorry, a $10 labubu can be sold for $200, $500. That's what craziness in the market does. Are you the trader who can be there when it's busy to make that profit when things are hot? Or are you going to say, this is a labubu. This is the leg of a labubu. This is the head of a labubu. This is the chain of the labubu. I know labubu. Come on. Come on. We can all label things. It's easy to memorize things to label. What does it mean? How do you do it? What are the mechanics? How do you wave your way through? That's why when a lot of the SMC traders are getting into prop challenges, they're failing miserably because they've never sort of been out in the real world to do this stuff. Suddenly, it's put to the test, and that's where things, take a dive. So I hope this webinar that we did today was useful. You guys understood as I tried to explain everything as best as I can. And obviously, I like to make fun and have a good time. Obviously, with all of you guys. I hope you guys. Where is my screen? Here. Okay. Let me turn off my screen sharing. Yeah. So I hope you guys had a good time. You understand, what I'm getting at. I always like to bring a little comedy, a little bit of anger, a little bit of stress, anxiety into my conversations. But it's only for me to be able to shake you a little bit and saying, hey, man, wake up, step out of the matrix. Like there is a way to do this thing, and you don't have to just follow things A plus B plus C only to make losses, but still believe A plus B plus C is the way to go. Wake up, right? Out of the matrix, out of the matrix. Come on. All right, guys. I hope you guys like this. Don't forget to like and subscribe. Again, if you want to pick up the Mastering Price Action 2.0, this is the entry-level course that is available on www.urbanforex.com/webinar. Until next time, guys, thank you all for joining. Thank you for spending the time with me. Take care. Bye for now.